What if I told you the next major financial crisis in America isn't housing, isn't credit cards, and isn't inflation? What if the real threat, the one capable of quietly shattering millions of American lives in 2025, something we've ignored for over a decade, a crisis built not in boardrooms, not on Wall Street, but inside the very system meant to help young Americans build a future? Because in 2025, something unusual is happening. Student loan balances are exploding. Defaults are accelerating, repayment support programs are collapsing, and an entire generation is heading toward a financial cliff they aren't prepared for. But the real mystery is this: how did a system designed to empower students become a machine that traps them? And more importantly, why is 2025 the year everything breaks? Today we're going to expose the origins, the rise, the breaking point, and the fallout of America's next major crisis, the 2025 student loan meltdown. Set the stage background plus key players plus hidden twists to understand the 2025 crisis. We must go back not to 2020, not to 2008, but all the way to the early 1990s. This was the moment America shifted from seeing education as a public investment to seeing it as an individual responsibility financed by debt. Over the years, Congress expanded lending programs. Colleges raised tuition. Federal agencies created new repayment plans that seemed helpful on paper but had a dangerous flaw. None of these systems were designed for a world where tuition grows faster than income. Every single year, the Department of Education became the largest consumer lender in the country. Millions of families entered the system believing it was safe. Colleges became financially dependent on federal loan money. And one quiet assumption allowed the crisis to grow unchecked. A college degree will always guarantee higher income, so student loans will always be manageable. But this assumption was wrong. 2025 is the year America finally learns the truth. The origins, how the crisis was born: the student loan system didn't explode overnight. It grew slowly, almost invisibly, through three main triggers. 1. Unlimited lending. The federal government allowed families to borrow far more than they could realistically repay. Like mortgages or business loans, student loans didn't require proof of income, assets, or creditworthiness. As a result, debt became the default option, not the last resort. 2. Tuition inflation. Colleges realized they could raise prices indefinitely because students always had access to federal loans. Economists call this the Bennett hypothesis, but in simple terms, when the government guarantees money, prices rise. 3. Wage stagnation. While tuition exploded, wages for young graduates barely moved. Degrees became more expensive, while the financial payoff shrank. This toxic combination set the stage for a system destined to break. The rise, the monster gets bigger from 2000 to 2020. Student loan balances grew from $300 billion to $1.7 trillion. Students became lifelong borrowers. Parents co-signed loans they couldn't afford. Colleges expanded luxurious campuses funded by debt. And then, the pandemic hit. For nearly 3 years, payments were paused. Balances froze. Millions felt relief for the first time. But beneath the surface, interest was still accumulating. And when the pause ended, the system restarted. Rougher, more chaotic, and more vulnerable than ever. With income-driven repayment programs updated, changed, delayed, and challenged in court. Borrowers didn't know what to expect. The monster had grown too large to control. The breaking point: why 2025 is the collapse year, so why 2025? Why not 2022 or 2030? 3 unprecedented forces collide this year. 1. The post-pause shock. Millions of borrowers entered repayment again in late 2023 to 2024. But by 2025, the real consequences show up. Rising delinquencies, surging defaults, borrowers unable to pay essential expenses. Families facing credit score damage. The government expected a smooth transition. Instead, it triggered chaos no one knows how to fix. 2. The IDR time bomb. Income-driven repayment programs like SAV were introduced to help borrowers. But millions of Americans now rely on these programs. They're far more expensive than originally forecast. In 2025, federal budget pressure forces painful conversations. Will the government reduce benefits? Will forgiveness be delayed? Will eligibility change? Borrowers who thought these programs would save them now face uncertainty. 3. The tuition bubble bursts. college enrollment declines. Interest rates rise. Families refuse to borrow at today's prices, but colleges must keep raising tuition to survive. This is the moment every bubble meets reality. In 2025, dozens of universities face insolvency. Some merge, some shutter, some cut entire departments. The system built on infinite borrowing hits its limit. The fallout, what happens next? The consequences of the 2025 crisis stretch far beyond college campuses. 1. Millions face financial ruin. Borrowers discover their balances increased. Interest grew faster than payments. Default destroys credit for 7 years. Wage garnishment becomes a threat. Renting becomes harder. Buying a home becomes nearly impossible. Student debt stops being a young person's problem and becomes a family-wide financial emergency. 2. The middle class shrinks. Student debt was supposed to create the middle class. Now it's eroding it. Graduates delay marriage, children, homeownership, retirement saving, and when an entire generation postpones adulthood, the economy feels the shockwaves. 3. The government loses control. The federal student loan system was never designed for trillions in debt. It was built for a smaller, simpler world. By 2025, loan servicing companies are overwhelmed. Repayment programs, conflict forgiveness rules shift, court battles multiply, budgets collapse. The system becomes unpredictable, and unpredictability destroys trust. 4. Colleges face a reckoning with families refusing to borrow. Colleges face declining enrollment. Lower enrollment gives less revenue. Less revenue gives higher tuition. Higher tuition gives even lower enrollment. A death spiral. Some elite institutions survive. Many smaller ones do not. Education becomes divided into two Americas: those who can pay and those who take the risk. Failed fixes why solutions keep failing. Politicians keep proposing solutions. Cancel student loans. Expand IDR. Lower interest rates. Regulate tuition. Make community college free. But none of these solve the core problem. College is too expensive. Wages are too low. And debt is the only bridge between the two. Till that changes, the crisis continues. And in 2025, the cracks finally become impossible to ignore. Modern parallels. History repeats itself. This isn't the first time America ignored a growing bubble. 2008 housing crash. Everyone believed home prices would rise forever. Dot-com bubble. Everyone believed every tech company would become profitable. 2025 student loan crisis. Everyone believes college debt is good debt. Every bubble shares the same pattern. 1. A system built on faith, not fundamentals. 2. Rising prices justified by hopeful narratives. 3. Warning signs ignored. 4. A sudden loss of confidence. 5. Collapse. The only difference is the asset. This time, the asset is America's future workforce. And the bubble isn't measured in property value or stock prices. It's measured in broken promises and buried potential. Final takeaways: 3 clear lessons. 1. Debt without income is a time bomb. When borrowing rises faster than earnings, collapse is inevitable. 2. Systems built on assumptions always fail. Education funding relied on the belief that every degree guarantees a higher salary. That world no longer exists. 3. Crises don't destroy generations. An action does if America refuses to reform tuition, wages, and lending. 2025 will be remembered as the year the next generation lost its financial future. Closing warning plus call to action: the 2025 student loan crisis isn't coming, it's already here. Its impact will shape the economy, reshape families, and redefine what it means to pursue the American dream. The only question now is this: will we learn from the warnings, or will millions pay the price? If you found value in this breakdown, make sure to like, subscribe, and turn on notifications so you don't miss the rest of this series on America's hidden financial crises. Because the more you understand, the better prepared you'll be.